All right, traders, the comeback has officially begun. I ended up losing nearly $11,000 yesterday, going against my trading plan and breaking my rules. With that being said, in terms of today as a whole, as a collective, Trader Society had a phenomenal day. As a collective team, we made over $300,000 today. And I got to give a big shout out to my team because they absolutely crushed it with put options today. As you can see, Dimitri, one of the best traders within Trader Society, he made over $12K using TD Ameritrade scalping SPY puts in and out. He's a momentum trader, doesn't hold for more than 2 minutes, in and out within seconds. Bobby ended up buying puts at the exact peak on SPX and made over a 420% return, and his small account is up 80% today. Top G absolutely crushed it. He now has his own program within Trader Society, and he ended up making over a 100% return on his small account challenge today. We got people who are absolutely destroying it. Jim C made over 60K in profit today, and I'm going to show you how we're able to consistently do this, because if you look at the polls are in. We had 59 people go green within Trader Society, only 9 red. In terms of Top G's new service, he is absolutely crushing it. 63 people green, only 11 red. So what I'm going to do for you within this video is we're going to be recapping trades, recapping price action analysis, recapping yesterday's plan and the new price action analysis. I'm also going to give you my updated trading plan to trade the best setups at the best prices. Fridays are known for being my best trading days, so it should be another phenomenal day tomorrow. Let's get straight into it. So in terms of today, I would describe this as a repeat of the FOMC yesterday, just a more slower, easier version. This is the 30-minute pattern that we used to consistently crush the put options. So in terms of the 30-minute pattern and what I was looking at, this was the main pattern right here. This is what we call trend identification, right? So we're capturing trends. If you look at this trend right here, what is the SPY doing? The SPY has this red candle on the 30-minute. The SPY has this red candle on the 30-minute. Then it has 3 bullish green candles, and it's a sideways slanted move to the upside, right? So you have this sideways slanted move to the upside, and then as you can see, you have 3 bullish candlesticks, sideways move to the slanted to the upside. What happens on the 4th candlestick? On the 4th candlestick, it's the exact high of day, and it had a breakout, and then it turned into a fake out. So you better believe when we saw this 30-minute candle close like this, we were extremely bearish because we noticed the same pattern is repeating itself. It had a breakout. It's 30-minute on the bearish. It's 30-minute on the bearish. And what happened after that? It sold off massively the next hour. And surely enough, history repeated itself and SPY had a massive sell-off. That right there was one of the reasons why people decided to hold puts, because of that pattern that I just showed awareness to you, along with the previous closing price from yesterday reacting as a resistance. In terms of the trading plan and my predictions, we were focused on put options today. We were expecting a we were expecting a bull trap where the bulls get trapped on spikes. And with that being said, in terms of the levels that I was targeting within Trader Society, you can visually see here, we were targeting 3 levels, and I'm going to explain to you what I ended up doing with these levels. So the plan was to buy put options. I said 397.40 is going to be your best level to short the SPY. I wasn't expecting it to test, but when it did test, it was an absolute gift because I wasn't chasing puts and getting caught up in a squeeze when this was rallying in the morning. I was actually doing fairly well as this was spiking. I'm going to explain to you why. But in terms of the put options, man, the plan was to focus on puts towards 3 levels, 393.74, 395.67, and 397.40. So within the chat towards market open, I did end up following through with my plan, which was to focus in on buy put options. We were targeting puts at the previous support levels. So in terms of your previous support levels, if we look at the overall chart, I was using this level right here. I was using this pre-market support. That's what I was targeting. The first level I was targeting was 394. It went well above that in the pre-market, right? So I was trying to short and buy puts towards that previous support. We had a lot of previous support on SPY towards that 394 level right here. Like I told you guys, if this level reacts as a resistance, it's going to try to have a nice crash and fill the gap from 390. I also told you guys, if you go back to my previous videos and if you look at the key levels, we were only targeting calls at 390, which was the exact low of day today. People did extremely well on calls, riding the trend, also buying the dip into the fear, because the key levels had stated the best level to buy calls right here. I said this yesterday and it's still relevant because it never tested. If it doesn't test, it's still relevant and we still have our price alert set. Gap to fill at 390, best level for calls. People banked on that as well. The low of day was at 390.35, right? So how is all this possible? So basically, just to give you a short and sweet recap in terms of the day, we were targeting puts right here because we were bearish. I explained to you why we were bearish in yesterday's video. But we know if it breaks above 394, it's going to have a nice move to the upside, because last time it broke above 394, it went all the way to 398, right? So we're going to avoid puts if that happens. But my next level for puts was this level right here, this previous support level that was never tested from yesterday at 395.70. I was looking to buy puts at this previous support level. That was my next level. If 394 reacts bullish, then that was my next level. And it was reacting bullish, and it was never at that level during normal trading hours. So I stayed away from the lower level. And then 395.67 was the next level. So what I ended up doing, I ended up buying puts at 9:32 a.m. exactly. I bought puts right here into the first bearish candlestick. I was anticipating a bearish move, and this could have been the top. So I was hitting puts there. And then in terms of where did I sell? I sold those puts at the exact low. I sold them right here when it crashed at 9:40 a.m. Why did I sell at the exact low? Because as a scalper, someone who gets in and out very, very quickly, what I do is I sell into the move. I sell near or at my price target. How did I come up with the price target? So SPY had a breakout above 395, and it started to form resistance towards my key level at 395.67, which was a previous support level that has never been tested. Therefore, the initial reaction right here, it's gonna try to sell off. And as you could see, if it tries to sell off towards that 395.67 level, it could have a big pullback, right? So that's why I was targeting that level. And I also explained to you why I was short biased in terms of yesterday's video. So when it hit that level and formed the first red bearish candlestick, I decided to hit put options. And then in terms of my price target, I told my team, I'm going to sell my put options for a profit at $395. Why would I sell at $395? Because SPY was breaking out, and it's going to try to pull back at some point and retest that previous resistance. And when it retests this previous resistance right here in the pre-market at $395 where it had the morning breakout, it's going to try to spike initially. It doesn't mean it's bullish. It could be a fake out, but it's going to try to bounce and spike initially. So I'm not even going to take my chance. I'm just going to sell into the move because I know the trend was reacting bullish at 394. It just had a breakout, and I know it can continue to go bullish. I also know there's a lot of games that are being played during market open within the first 30 minutes, right? So knowing that, I sold as soon as it hit my target. And then it bounced and spiked 3 minutes later. I literally sold the lows. People banked on that. We had a couple people make over $1,000 just on that small 50-cent scalp. And then from there, I was telling people, okay, we're going to wait till 10 a.m. because that's a key reversal time, and we're going to see if the trend can break. How can you determine if the trend breaks from bullish to bearish? One way you can determine if the trend breaks from bullish to bearish is if it goes back to the previous resistance level and it starts cracking and forming resistance. So when SPY breaks above the highs right here, it breaks above the highs, it's going to pull back. If it turns previous resistance into support, it's bullish, and it's always going to try to bounce initially, right? If it starts forming lower highs and breaking below the previous resistance, then the trend is going to start to flip bearish. But if it keeps breaking out and then pulling back and turning the previous resistance level, the previous level where it had a breakout, into support, then the trend's going to be bullish, which is why I never hit puts. I kept telling people, I'm not going to hit puts until the trend flips bearish from here. I'm already up nicely on the day. And then from there, I just called it, and then I had some very nice trades later on. Another thing that I told people is, and I warned them, do not do puts early into the morning after my first trade, was this. I told people, and people were so shocked that this happened, but I wasn't shocked because I understand how to read the chart and how to read price action. I am well aware that if 394 right here breaks out and reacts to support, SPY can have a big upside move instead of a big downside move. I'm well aware of that. So if it reacts bullish at that level, I'm gonna not do puts. And if I'm in puts, I'm gonna cut my loss because I don't hold through big moves like that. And then I said the same thing right here. I told people, you know, if 395.67 breaks out and then it pulls back and reacts to support, they're forming support at this level, I'm not going to be doing puts on SPY. I'm not going to be doing puts on SPY because the last time this bottomed at 395.67, it had a big upside move to $399. And I'm not holding puts through a big upside move. If it reacts bullish at this key level, I'm not going to hit puts. And I told them that it was reacting bullish, and I swayed away from puts. Then from there, the main focus was that 398 zone. I had a couple lotto trades, nothing too crazy. I did some calls, I did some puts, nothing too crazy before that. But I started making my money, man, when I was sizing 75 to 100K at the exact peak. So Why was I hitting puts at the exact peak when this was above $398? I kept hitting puts, had one small loss, got stopped out, and then I had two very nice wins, and then I proceeded to trade puts later on during power hour, and I did very well on those as well. So why did I decide to do that? Because of this pattern. You have this red bearish candlestick, you have this red bearish candlestick. You have three bullish candlesticks slanted to the upside, you have three bullish candlesticks slanted to the upside. Another reason why we swayed away from puts is because it kept forming bullish 30-minute candlesticks. Bullish 30-minute candlesticks, no reason for puts. If it turns 395.67 into a floor, they're going to send this back up to $399 to $400, right? So we're going to avoid puts. And we respected the price action, even though we were bearish, and I was shocked that it went this high. I respect the price action, and I told myself, all right, the new best levels for puts is at 397.40, but there's still no bearish confirmation. And then what we ended up doing was we identified this pattern. Three slanted bullish candlesticks, three slanted bullish candlesticks. When you have that first, so it breaks above the highs, it breaks above the highs. First red bearish 30-minute candlestick, first red bearish 30-minute candlestick, and then it's all downhill from there. Check this out. You have this red, green, red, red, green, red, sells off, right? Same exact pattern. This is why you need to focus on trading the chart and trading the price action. We have a plan and we want to stick to that plan, but we don't want to blindly follow a plan. We want to use confirmations, and those confirmations can alter and change the plan. I wasn't planning to buy puts at 398. My best level was 397.40, but we went with higher levels and waited because every single time SPY had a breakout, it would drop and turn previous resistance into support. And all of the 30-minute candles were bullish. Therefore, there was no reason for puts, despite the plan. This is why we did so well, because we didn't blindly trade a plan. We traded the intraday chart in the price action, but we still focused on the plan, right? And the plan was to focus on puts. So when it hit that best level, and when it formed this pattern right here, like I said, you have this red candlestick on 30, you have this red candlestick on 30, and then you have three slanted green bullish candlesticks to the upside, then you have three slanted bullish candlesticks to the upside. When it forms that, it breaks out, and then it ends up being a fake out, breaks out, ends up being a fake out. That first 30-minute red candlestick, what happens? Massive sell-off. So as a trader, you better believe when we see that SPY has this red candle, then it has three slanted green candles, then it has three slanted green candles, and then it breaks above the high, and then it breaks above the high, and it forms that bearish doji 30-minute, When we see all of that repeating itself for 2 hours and 30 minutes straight, and we have the first bearish candlestick on the 30-minute, what do you think we're going to be focusing on? We're going to be focusing on puts. It's at the best level possible, and the 30-minute chart is going to be one of your best confirmations because it's going to be directing and dictating the next 30 minutes worth of price action. Also, it was very attractive for puts because look at the level. On this 399 previous close, when this white line reacted as a resistance level yesterday, it had a massive sell-off. When 399 previous closing price from yesterday's reacted as a resistance, it had a massive sell-off. So when you put the pattern together, you put the support and resistance together. This is where yesterday the bull trap got created at 399, which was one of the best levels for puts. When it cracked under that previous closing price, that's when it was actually confirmed like super bearish. You better believe when we see that and how quickly it can drop aligned with this same 30-minute pattern, look at it, compare the left to the right. It's the same thing, folks. This is why I always tell you as well to wait for something to develop. I genuinely believe the best way you can kind of trade in a sense is to just wait for something to develop. Wait for a pattern to develop with your trading plan. Wait for a pattern to develop at your key levels. Wait for a trading plan to develop at the best setups, at the best prices. Best confirmations you can truly use if you're trying to hold it a little bit longer is that 30-minute chart. Notice how SPY starts to drop after it forms that 30-minute bearish candlestick. Notice how the pattern works 100% onto the T and it crashes from this key level when it forms some sort of pattern. Three bullish candlesticks slanted upside, one bearish candlestick on the 30-minute, it even had hit a new high and then it had a fake out. One bearish candlestick on the 30-minute, the first one, new high, then had a fake out. What do you think, right? If we're comparing the left to the right, we see this in real time, right? What do you think in hindsight we're going to believe? In hindsight, when you see this 30-minute candle close like this, right? So right here, 11:30 a.m., the candlestick closes. What do you think my team and I is going to be thinking? We're going to be thinking, oh man, this is a beautiful pattern to play puts. And it's also at an amazing price where a major bull trap was created once 399 previous closing price reacted as a resistance. That's what we're going to be thinking. And before that, before all this happened, I was looking at the 1 minute, I was looking at the 5 minute, and I kept saying, wow, this is bullish. I was telling people, it's reacting bullish. It turned the pre-market highs into support, where I sold my puts exactly. And then from there, I stayed away from it because I told myself, they keep turning previous resistance into support. This is going to go bullish. I'll keep an eye at 395.67, but if it breaks above that, then there's going to be absolutely no reason for puts until the next level. And the next level is right here. It's no shock that it goes this high. History repeats. It's just so obvious. If 394 breaks out and reacts to support, it's going to have a massive move to the upside because that's what it did last time. If it breaks down and reacts as a resistance, it's going to have a massive move to the downside and it's going to start to fill that gap from 390. If 395.67 breaks out and reacts to support, it's going to have a massive move to the upside because last time it bottomed at 395.67 and it went to $400. So trade the candlesticks, and these 30-minute charts are really going to help direct you with the overall trend and the overall price action for the next 30 minutes. But it's no shock of these major moves. These major moves are no shock because the patterns are predictable. The price action is predictable. The chart says if 395.67 reacts to support, they're going to send it back to 399 because that's what it did last time. And we know if those key levels react as a resistance, then it's bearish, right? So it was just a no-brainer for puts in a sense because you have these three slanted green candles, these three slanted grand candles. When you have the first fake out with the new high and the first bearish 30-minute candlestick, it's all downhill. First bearish candlestick, 30-minute high, it's all downhill. And also, if you just look at the chart, you tell me, right? If you slept on this, like if you guys weren't focused on puts, because I had puts at 398 3 times when I was seeing this, right? If you slept on this and had a red day, it's like, what are you doing, man? Like you need to wait for something to actually develop. Look at how easy that is. Look at how simple and easy that is if you just wait. Look at it. Compare the left, 3 bullish slanted candles, 3 bullish slanted candles, 1 bearish candlestick, the first bearish candlestick, 30-minute, right? And it has a fake out. That should give you all the confidence in the world. When this 30-minute candle closes bearish at 11:30 a.m., you should have all the confidence in the world to play puts because the pattern keeps repeating itself. That's your confirmation to get in on puts when this 30-minute candle closed bearish. That's when you do it because you have the 3 slanted green, you have the fake out. It's doing the same thing and it's at the same level. Look at this, man. After that, when that first 30-minute bearish candlestick formed, at this level, where it had massive downside and the bull trap was created, you hit puts. That's when you need to be the most confident. So that's how you do it, guys. That's how you identify patterns. That's how you capture it in real time. Anyone looking at this chart, right? So right here, when this 30-minute candlestick closed red, if you use what I'm teaching you, which is to capture patterns, capture trends, use the 30-minute chart. If you utilize that, when this 30-minute candlestick closed, you should have said, Will's going to buy puts here. This is going to be extremely bearish pattern. And this is where the bull trap was created yesterday for big downside potential. And I'm also seeing this bearish pattern to confirm that it's going to happen again because 3 slanted green to the upside, 3 slanted green to the upside. First 30-minute bearish candlestick fake out for the new highs. First 30-minute bearish candlestick fake out for the new highs. And then what does it do? It sells off. There's your confirmation, folks. So simple. Use that 30-minute chart. Now, what are my views in my team? I'm telling you, my team crushed that, man. Tens of thousands of dollars. Collective as a whole, over 300K. Top G, his small account doubled today, up over 100%. Just started the program. And, within the profit segment, we have people, Z-Man just started his small account challenge. He made an 80% return today, nearly 80% return today. Started with like 997. It's over 2K now. He's crushing it every single day within the chat, man. We got people absolutely crushing the market, and we're going to keep on doing it, folks. So stick around. So what's my trading plan for tomorrow? Now that I taught you how to capture trends, how to use the 30-minute chart, how to identify when the trend shifts. So another thing in terms of when the trend shifts as well, if you're using 1 minute, 5 minute, this is another way to identify when the trend is shifting. I'll show you one quick example here and then we'll get into it. So when it stops turning the previous breakout level into support, that's when the trend's going to flip. So right here, SPY has a breakout. It breaks above the highs. And as you can see, that's at 398.50. And then it breaks out, turns it into support, trend still bullish. Super bearish candlestick. Now it's dropping under for the first time of the day. And now it's forming lower highs at that previous resistance instead of support. the trend is beginning to flip. Don't you see how easy it is to determine that, right? So if you're looking at the 1 minute, it breaks above resistance and then it bottoms. It's still bullish. Once it goes under that and forms the lower high right here, goes lower, that's bearish. More lower highs, more lower highs, more lower highs. It's no longer maintaining the support. It's no longer turning the previous breakout level into a support level. It's now turning it into a resistance level, a lower high and going lower. These are all of your confirmations. And then this right here, this is your death because the trend's completely changed bearish because it's just cracking below support now. It's super bearish with new lower highs. And I talk about the dojis all the time. Look at this, man. Doji's at support, it spikes. It cracks. Doji's at resistance, right? Towards the previous support. It's resistance level now because it cracked. It cracked support. Now it's forming the lower high with the doji. Nothing but downhill. So simple, man. Use this information, man. This is going to help make you guys money, and it's going to help you put you in the most competent trades to trade the best sets of his prices. So in terms of tomorrow, I don't have too much of a strong read or strong opinion on the daily candle. So sometimes in terms of patterns, I'll have a strong read on things. But in terms of the daily candle, I'm not seeing too much in terms of direction on where we're going based off of just the daily candle, right? So it could either drop or it could spike. I'm more short biased though, for sure. Definitely more short biased. But based off the daily chart, I'm not seeing too strong of a reason to be like long or short biased at the moment. But what I'm going to focus on is my key levels, right? So I don't just trade the daily candle, right? I look at all the time frames and I stack everything to in my favor together. I'm just saying in terms of what that daily candlestick looks like, to me, it's saying it can either go up or it can drop or it can just chop. Like it's not the most attractive level. But anyways, let's just ignore that. So that's right there. Daily chart is lack of confirmation for me, which in terms of making these videos is not going to be the most predictable in a sense because there's already lack of confirmation with the daily candle, right? I can only do what the chart is giving me in real time. That's why being in Trader Society, where we show you everything that's going on in real time and the plan and things can alter in the patterns, we bring awareness to everything in real time. But anyways, this is what I need you to focus on, and this is what I want you to be aware of, right? So we're going to take a look at extended hours trading. So now we're going to prepare for tomorrow based off what the market has given us. So SPY closed at 393. Right now it's having a small move, a small gap up. That can change, but right now it's gapping up. So our first key level is going to be this 393.17. We're going to keep a close eye on 393.17. What we know about this level is this is the pre-market lows. This is where a major bear trap was created at support for a nice move up. What we know about the overall move on SPY in terms of the overall move in direction is it's bearish because it keeps on turning this previous support into resistance and it keeps on cracking. However, and this is why I said calls at 390. If you guys watched my previous videos and if you looked at the previous key analysis, I told you guys take calls at 390. And the reason why I said that was you have a gap to fill right here. There's a little gap to fill that people don't pay attention to at $390. There's a gap to fill at 390. It never filled. It partially filled and had a reversal. It missed it by a couple cents. I ended up buying calls on this day and did very, very well for those of you watching the channel. But I told you guys, when this drops back to 390, scalp the dip. And it literally bottomed at 390.35 and it shot right back up to 395. Absolutely crazy. We hit puts when this was at 395, right at the WAP, short for VWAP, we call it WAP. But yeah, that was another nice scalp we had. But basically what I want you to understand is in terms of what is actually happening, SPY's having a gap close reversal, which is technically bullish. It's reversing at the 390 gap, which is bullish, and it's trying to reverse at the 392 gap as well. So what we know is it's trying to react bullish. But in terms of the overall trend and how this kind of looks, it keeps turning previous 30-minute candlesticks into resistance levels. It keeps trying to crash in a sense. So just understand it's having a bullish gap close reversal, but it keeps forming lower highs as an overall direction, which is kind of bearish in a sense. Now, this is what I'm going to be focusing on heading into tomorrow. So $393.15 is going to be our key level. What do we know about our key level going into tomorrow? We know this was where the pre-market lows were at. we know this is where a major bear trap was created in the pre-market in the morning, right? So we know very bullish moves have been happening at this level. In order for the bears to continue to drop, we need to see $393.17 crack and react as a resistance level. If they can form a ceiling and a roof at this level, then we drop back to 392. If it goes under 392, then we drop back to 390. And I would not look for anything under 390. I wouldn't do anything under 390. I told you guys in terms of puts yesterday, in terms of my price target was the exact low. We crushed this. If you look at the key levels here, I literally said, my prediction is, I said this at 8:20 a.m., the best level for puts was 397.40, but I wasn't expecting it to hit, but we didn't get screwed because we traded the intraday chart in the price action and we respected that, okay, 395.67 is support. Chart says it can go to 399. I'm not going to hit puts because it's bullish, breaking out, turn into support. Respect the bulls, even if we, don't want to do calls, just respect them and sit on the sidelines, if anything. So I said my prediction was 390, right? That was my low of day prediction. That's where I was expecting it to drop to. And in terms of calls, I made it very, very clear within the key levels because we had a gap here, and this was yesterday, and the levels are still relevant because it was never tested. Yesterday at 4:40 a.m. in the pre-market, I said there's a gap to fill at 390. This is your best level for calls, which was the exact low of day today. So that was phenomenal. So right now it's having a reversal. It's having a gap close reversal, which is micro bullish. The way I'm viewing the chart is a little more bearish in a sense, but for the micro, that's bullish that it's reversing at this level, but it keeps trying to go under, it keeps trying to crack. So we have to see. So what we know is 393, technically 392 was your major pre-market low support, also had nice support at 393, right? So 393.17 is make or break. If it cracks, we go to 392. If it goes under that, we go to 390. Since we're at a lower level for puts, and like I said, I have one target. So if I buy puts at 393 because it's confirmed and looks bearish, then I just sell at 392. I don't hope for it to go under 392 and then, sell at 390. I don't do that. I just sell into the move. That's how I didn't get screwed on puts, because I sold into the move. SPY had a breakout. I bought puts at the exact peak. It dropped to the previous resistance. I knew it can try to spike at previous resistance because the trend's been bullish and it's been breaking out. So instead of holding and hoping, I'm just going to sell into the move because it could bounce. Doesn't mean it's going to bounce. The trend could flip bearish, but initially it's going to try to bounce. And then if it forms lower highs, the trend's going to try to flip bearish. But if it holds, then it remains bullish, and it held, right? So I'm not going to play those games. I'm just going to sell into the move and play no games. You know how it is, especially the first 30 minutes. So 393.17 is make or break support. We're at make or break support right now. 393.17 is make or break support. Let's see what the 30-minute chart is saying as well. So we know 393.17 is make or break support. We know the SPY has been doing very similar patterns to yesterday. It's been doing very similar patterns. Today was basically an identical day compared to yesterday. If you just look at this is identical. Compare the left to the right, exactly identical. So what we know is we got the make or break support at 393.17, and let's see, man. It's just I'm not seeing too strong of a read at the moment. I'm not seeing too strong of a read on anything. If we maintain under 395, it should get crushed. If we maintain under that, if it breaks above, they're gonna try to push this back towards 396 to 397, right around there if it breaks above. So right now, I'm not seeing too strong of a read. Once we get some nice patterns at our key levels, tomorrow there's going to be some phenomenal trades. I already know it. Tomorrow's going to be a great day. But basically, the main level that I'm just going to focus on for tomorrow as of now is going to be 393.17. That's make or break support. If it reacts bullish, it's a buy. If it cracks and reacts bearish, then you hit puts in and out quickly. It's not the most attractive level for puts. In terms of a higher resistance level to target, let me just see here. So if there were a higher resistance level to be targeting, what would that be? What would that level be for me? So I'm gonna give you guys this. I'm gonna say, if we react bullish, if this is holding above 393, then what I would tell you is this. I would tell you to look for a put option towards this previous support that really hasn't been tested right here, 397 to 398. That would be a put zone. So here's what I know now. The best put zone, 397 to 398 towards this previous support. And I'm also going to be focusing on 393. This is make or break support. If it cracks and reacts as a resistance, it's going to go bearish, but we can't expect some sort of massive drop, man. It's not the most ideal and best level to be buying puts. It's even dangerous in a sense. But if we get bearish confirmations, I'll hit puts at 393.17. And then in terms of our make or break level, I would say 395. 395 is make or break. If we break above 395 and hold it, they're going to push it to 397, 398. If it maintains resistance, they're going to push it to 393. If 393 holds, it goes back to 395, and then the same cycle tries to repeat. If 393 cracks and reacts as a resistance, we go to 392. Under 392, it drops to 390. Those are my overall levels. I have no interest in really doing anything else. Yeah, I'm not really seeing anything else. I have no interest in anything else. So basically, in a nutshell, I'm going to be paying attention to 397 to 398 zone. That's our best level for puts. I'm going to keep an eye on 395, and then 393 level is a make or break gap. This is where a bear trap was created, so it's a very dangerous level for puts and the worst level for puts, but it could end up being the best level for puts. We got to see how it looks in the morning, right? But based off the chart, it's right now technically it's considered the worst level for puts. But if it cracks and reacts bearish, I'm going to hit puts down there because overall this does kind of look bearish to me. It's just you do have to understand one of the disadvantages that I'm seeing with puts right now, and believe me, this is a severe disadvantage. It's having a gap close reversal. It hit 390, it had a reversal, that's bullish. It hit 392, it had a reversal, that's bullish. So in a nutshell, if you're going to do puts, I would say the best thing you could do possibly is puts between 398 and 397. 393 is a make or break support level, and puts are not ideal as support. It's something that I'm going to be watching. My levels as of tomorrow are 398 to 397 for puts. 395 is the make or break middle level, and 393 is make or break support, the least attractive level for puts, but I will be eyeing it, right? Because this does look overall kind of bearish. So I'm going to be eyeing it. If it looks bearish and reacts bearish to 393, I'll hit some puts, but I will use a very tight stop. Most I'll risk on that is like 390, 370. I'll risk around 390, 370, 390, 380. Won't risk a lot. 397, 398. I'll risk 399 on that. And 395 is your make or break middle, right? But looking at the 30-minute, it's a little complicated right now because it's having a bullish gap close reversal, but as you can see, it keeps on turning previous support levels right here, nice support at 395, into resistance, which is bearish, but it's reversing at the gap, which is bullish. So if this does exactly what it does for the past 2 days in a row, it's going to spike to like 397, 398, and then crash again. That's what it's going to do if it does the same thing over and over again. And that's what I think is the best thing you do for puts. But I will be watching 395 and I will be watching 397. In terms of best prices, I would say 397 to 398, and then keep a close eye on that 393 level. That's make or break support. So remember, you got to be very cautious, and puts are not ideal at support. But we'll see how it reacts, right? But that's the game plan. You know what the worst thing to do is. I told you. So worst thing and best thing, right? So with that being said, if you do want to be a part of Trader Society, that is going to be the first link down below to join the program. So Trader Society is a one-time fee, and it's a lifetime access. When you join the program, you will also get access to another program if you like to join it. It's not expensive, where you get access to Top G. He is the first professor within Trader Society, and he's absolutely crushing it within his small account challenge program. But with that being said, if you want to join, this is the best place to be, guys. What we do and what we're dedicated is, we're dedicated to SPY. We are trading SPY every single day, and we're trading the best sets of best prices. We strategically plan out our trades. We trade live on voice, live on stream as well at times, and we're crushing it. And this is the money-making floor, man. This is where you're going to see the best traders. The best traders, they have a highlight green on their name. So Jim C, his style is he holds his trades. He does a lot of swing trades, and in terms of his day trades, he'll hold them for hours. He's not scalping. He's holding day trades for hours, right? He's a different strategy, and it works very well for him. Dimitri, he's a momentum scalper. He scalps focused on momentum, not focused on, getting the best entries in a sense, right? So he can help you in terms of scalping momentum in and out very, very quickly within seconds to minutes. In terms of my scalps, I don't scalp that quickly. He's the quickest scalper here. He scalps within seconds to like under 2 minutes. I will typically scalp within a couple minutes. I'll look to get in and out, I would say, within like 3 to 5 minutes. Sometimes it's 2 minutes, but I'm not looking to get in and out within seconds usually. It's usually like 3 to 5 minutes, sometimes 10 minutes. That's my average kind of scalp time, I would say, is like 3 to 5 minutes, sometimes 10, 15 minutes at the most. But yeah, we have many different styles, and we're all focused on mastering the SPY. And we have many people in here who are consistently making 5 figures a week just trading SPY. And that's all we really do is trade the SPY. So if you want to surround yourself with the right network, with the right community of traders who are absolutely crushing the SPY every single day, we have plenty of great moderators. Jim C, Mohammed, he does dark pool levels. We also have, Jim C, Mohammed, Top G now has his own program. We have plenty of great people here, man. So if you want to surround yourself with the right network, with the right education, with the right community, this would be the place for you, man. I'm telling you, we're absolutely crushing it. So if you want to trade the best set of prices, if you want to get access to the real-time trade analysis, to my real-time trading plans, to my real-time trade alerts, to the live streams, to the voice channels, if you want to get access to the networking opportunity, the moderators, if you want to get access to the course, to the video lesson library with over 100 hours of content, it's going to be the first link down below in the description. It's a one-time fee. It's lifetime access. And then you will also have the option, if you would like, if you want to expand your education, it does not cost a lot to do so. You can learn from the first professor within Trader Society. Me personally, as someone who's been trading for over a decade and as someone who's owned an educational business for 5 years now, I've been looking for a very, very long time for a professor to teach, within Trader Society. So he does, do some alerts and do some trading in Trader Society for those of you in the program, but he has his own separate program as well. And that's where he is all the time doing the live streams and doing everything it is that he does, right? I've been looking for someone to teach as a professor, and we finally found our guy. I genuinely believe that this is our guy, and every single day he's been crushing it, man. He's been doing this for free for over a year now, and he started live streaming and teaching the past month, and he just launched his service, and he's killing it every single day. So I got to pay my respects to him as well, because he's absolutely crushing it, man. Like, if you look at the polls, it all speaks for itself. Every single day, man, he's averaging like 75 to 80% plus people going green every single day. And a lot of these people are new. They're just getting started with trading. Once they become professionals and once they understand how to master it, the polls and results are only going to get better within time. We only improve within time. When we see a low or when we have a red day, we're only learning and growing more. Like, we always finish stronger. Like, we are the finish line. We're always growing and becoming better within time. That's another reason why, in a sense, like, I don't like red days, but for the most part, as long as you're disciplined, you're going to learn something new in those red days that's going to propel you to the top. So as long as you're disciplined, red days are actually a good thing. You just got to cut your losers quick, like we do. We get in and out. We don't hold losers. We get in and out. And I don't hold my wins very long as well, right? But I have a very high win rate. I cut my losses quick, and we scalp. We get in and out. We don't hold our hopes. The main person who holds is Jim, and he does phenomenal holding. All the power to him. It doesn't work well for me. And I just do what I do best, which is scalping and trading in and out, right? Like a sniper. Everybody has their own trading style with what it is that they do. But yeah, I'm telling you, man, there's nothing like this. There is nothing like this SPY floor. There's nothing like the SPY floor. There's nothing like this SPY floor. And I would really encourage you to join the program. It's the first link within the description. If you want to take trading seriously, surround yourself with the right network. I'm going to leave it off at that. We're going to be raising the price of the program starting end of March. We're going to raise the price. We don't do coupons. We only raise the price. This is the best time to join. So if you want to take your chance and you really want to take this seriously and, take that leap, this would be the best time for you guys to seriously join. I'm going to leave it off at that, man. I will see you guys tomorrow live at Market Open. We're going to absolutely crush it. It's the first link down below in the description. If you would like to join us and surround yourself with the right network, the moderators, we're going to help propel your trading to the top. I'm telling you, your trading will improve if you take this seriously. You will start getting results and you will see massive improvements. You will see how predictable trading SPY is. So predictable to the point where you can show your friends and family, look at this pattern, look at how simple this is. Look at this. Look at how predictable this is. This is why I'm going to short here. This is why I'm going to buy here. For anyone who tells you that, stocks aren't predictable, it's all fugazi, it's all manipulation. They're not trading the best set of best prices. They're not strategically waiting for 30-minute patterns. They're not listening to the videos. They're not respecting the price action. They don't know how to identify bull and bear traps. This is fairly predictable. The hardest part is being disciplined and sticking to it and waiting for something to develop. That's the hardest part. But if you get that down, you're going to see how amazing and how predictable that SPY actually is. And it has the most liquidity in the market. I'm dedicating my time to something worth dedicating my time, because in terms of the market, this is how you make the most amount of the money. By trading SPY, by mastering one stock, the most volatile stock with the most lucrative and liquid option chain that is only going to continue to grow. People are going to look back at these videos now 10 years later, and they're going to be like, wow, this team of Trader Society caught a trend. And they're at such a big level one day when we have tens of thousands of members within Trader Society, and then eventually 100,000 members. We're going to be at such a high level where we're going to be doing amazing things as a whole and as a team. We have many members now, but you can still get in towards the ground floor because this is going to get extremely big and the price is only going to go up down the road. So I'm going to leave it off at that, man. I'm telling you, one day we're going to have 100,000 people in the program, averaging a $1,000 profit on a nice green day. Some are going to make a lot more, some are going to make a lot less, but as a whole, as a collective, I think we can average that out to $1,000 with 100,000 people, and that's going to be $100 million in one single day. And there's going to be big things, man. There could be hedge funds. I know there's going to be big services. There's going to be software. We're going to be doing some very big things because we're laser focused on dedicating and owning the SPY. That's what we're going to do collectively as a whole and as a team, and we're only going to continue to grow stronger together, right? We are still learning as students within the market every single day, learning how to improve. And we've really got this down. So if you want to be a part of it, it's the first link down below in the description. I will see you guys tomorrow, live towards market open.